It slightly drives me up the wall that the Bank of England isn't making that judgment.
Looking at the breakdown of how the MPC voted on it, it was 7-2 for this quarter point cut. The two who didn't vote for the quarter point wanted it to be cut even further, didn't they?
Yeah, I think they're right, personally. I think actually the disinflationary pressures in the economy are pretty strong at the moment. We've got absolutely no growth. And I'm going to come back to this. One of the people who voted for a half-point cut was Swati Dhingra, who's been on this podcast. Absolutely fascinating interview if anyone wants to go back and listen to that, because what she had to say is still absolutely relevant in terms of the outlook for monetary policy. They actually had slightly different reasons for wanting a bigger cut. In the case of one, it was about symbolism, determination, as it were, to show that the Bank of England is responding to these rather depressed conditions we're in. And the other simply takes a slightly more long-term view of the way in which inflation seems to be on track to come down. It is always disappointing for somebody like me if you think that actually they should be cutting bigger, but in the end the Bank of England goes with a more cautious approach. It was very interesting listening to the governor, Andrew Bailey, talking about whether essentially the problem for the British economy, in terms of why it's growing so slowly at the moment, is that there's not enough demand. In other words, not enough confidence of consumers in terms of what they're spending, not enough confidence among businesses in terms of what they're investing, or whether the problem is on supply. That basically we just haven't got enough capacity in the economy. It's slightly depressing that they can't answer that question. And one of the reasons it's depressing they can't answer that question is because if the problem is weak supply, it means that it doesn't take much of an increase in demand for the inflation rate to go up again.
Yeah, because supply won't meet the demand. Yeah.
So if the problem is supply, then the path for interest rates to fall will be more gradual and slower. And if they were to take the view that this is very much a sort of what we call an animal spirits problem, people are just not confident enough, then you would cut faster.